Hey, what's going on, guys? So I'm here again today with another playbook trade that I wanted to put on here that I enjoyed making. So let's quickly get into it. So we're going to first take a look at the cues. This is a 15-minute chart. Just to review that this was Friday. This was the big sell-off we saw in semiconductor space, bringing the whole market down pretty far. Furthest it's been in months, lowest it's been in months. And then opened Monday, tested that bottom, bounced. Tuesday, continuation higher with a little gap up. Wednesday, consolidated, kind of came down a bit. GDP was released on Thursday at 5:30 or 8:30 Eastern. So we gapped down, but we showed strength, kind of rallying, basically up against the previous day's lows. And then today, coming to the session, we were gapping up on a slightly higher than expected PCE number, but the market seemed to shrug that off and kind of push us higher the rest of the day. Similarly, we can see the same thing in the SPY here. This is Friday's low. Came down, bounced, gapped up higher, consolidated more or less for a day, gapped down on the GDP, but came back into the lows of the previous day and then gapped up today. So today, coming today, Friday, April 26th, 2024, let's here look at NVDA. So this was the sell-off on Friday. You can see Friday of last week, a week ago today. You can see how drastic that sell-off was. We fell from $830 down to $750. So an 80-point move, over 10% for NVIDIA. And then Monday bounced after a capitulation bounce. We saw after it had been falling, gapped up higher, consolidated in the afternoon, came down Wednesday, fought against that GDP like the rest of the market, up into this kind of resistance level from a day prior, and then gapped up to start the morning today. Okay, so this was coming into the close yesterday, and then the initial aftermarket. Now, importantly, yesterday aftermarket, both Google and Microsoft released their earnings. Very, very well received by the markets. And so Google shot up, Microsoft shot up, many other names, equity names, shot up in sympathy, tech names especially, as it showed a lot of strength that they're still in the tech sector, which had been showing weakness in the last number of weeks. So this is our initial bounce. We've seen NVIDIA in sympathy, and then consolidated down a little bit. We put in this, it's not the high, but it's the post-pop resistance that we met in the after hours at $845. We hit it once here, we hit it once again, got above it in the latter part of the after hours, and sold back down, kind of using it as support. Opening in the pre-market this morning, we opened below it, came down. This level I just marked is our pre-market bottom. Had two quick touches of that. Consolidated sideways most of the pre-market, and then this here was 5:30. That was the release of our PCE data, inflation data, which came in again slightly worse than the expectation, but the market didn't seem to care. So we see NVIDIA fly up $6-7 right up against that 845 resistance, and then sold back down against it. So we've had a decent amount of touches on this $845 level, which will come into play later. Now coming into the beginning part of the morning, so here we see here that PCE pop and then the consolidation. You can see off the open we come right down to this pre-market low, and then we get a quick bounce. I'm sure there were people that bought this low, felt like they made a great trade. For me, it's more of a coin flip. I've seen plenty of times where this thing will just go straight through that level without any regard. for the pre-market low. So I prefer to wait until you see an actual confirmation of the direction, and we know in the first 15 to 30 minutes of the market you're not going to have the most rational moves either direction. Things will jump $1 this way, $2 that way, especially a name as high priced as NVDA. As you can see, we dropped $4 and jumped up 8 in the first 5 minutes of trading. So it's just too volatile this time to really, with conviction, get into anything for my taste. I'm sure plenty of people would have played that, but anyways, so we get down to that support, bounce, come up close to that $845 level, but sell down, and then at around 640 we start to make a more methodical move back to the upside, and then we come right up against this $845 level. We, with increased volume, which is important here, we're starting to trend up over the past 5-6 minutes. Big, tall-bodied green candle with increased volume. And so then the next candle, we break above the level, but we come right back down quickly. The important thing here is the candles that follow. So we break the level, we fail. But immediately following that, we get another tall-bodied candle to the upside that goes right back through that level. So I bought probably a little, I think my fill was $845.40 or something. So I got in just 40 cents above that level, with a break above, kind of above that previous, right around the previous high of that bar. And then we're off to the races. So up $5 until we meet this $850 level. The significance of the 850 level is mostly psychological. In my mind, there wasn't any clear support and resistance on the chart that I could see at this level. But anytime you run into the whole dollars, as I think I said in the last video, the 50s, the 100s, the 10s, the 5s. I'd say the 10s, the 50s, the 100s, those are the big ones. The bigger the dollar amount, probably the more people pay attention to it. So 850, right in the middle, that's one that people are going to be watching. So we came right up against it. Now at this point, I'd already gotten out of this trade thinking we might get a potential fail at 850, just protecting the capital here. But we put in a couple minutes of consolidation, and then, as you can see, the volume here as we consolidate at that level, right under that level, in my mind, the volume decreasing here with this consolidation, with the price not going down, is telling us that less people are selling. So the less volume to me shows a contraction in the selling. So less people are selling, more people are holding their shares here, and the volume that there is coming into it is probably more likely to the long side than the short side. So volume drops, volume drops, volume drops, and then we get the break. We get a huge, almost 3 times the previous candle volume, just visually. Breakout, tall-bodied candle to the upside. And I bought the breakthrough 850. And so you could put your stop down here at the low of the consolidation level. I would say this breakout long actually probably is a better risk to reward trade than the pre-market high level here, just because you have a more clear place to put your stop, since you consolidated kind of right around between 848 and 850. For a couple minutes you have a bottom to work with, whereas this break above 845, it kind of is just a move straight to the upside, and you can't place a stop as methodically, I guess you could say. I mean, you could put it way down here, but you're risking $3-4 versus risking $2 on this one. So anyways, tall bodied, increased volume, green candle, fly to the upside, 850 to 850. What, we go up $5 in the next few minutes. Once again, I was out of this trade up around here. But we've seen two moves put in basically. We got the initial break of the pre-market consolidation, move 2, break of the 850, up to here 858. See another consolidation here, a bit wider, but each time it sold down, the buyer is still showing resilience to push the price back up. And also during this consolidation, you can see once again our volume contracting until we get once more the break above 858, the consolidation high. We have increased volume, almost double the previous bar, fly through it again, and then pull back a little, and we continue the upside. So this was a trade that I felt like gave numerous chances to enter to the long side. I would have liked to have held some for more of the move just to see what it did, especially with the overall market kind of doing its thing as well. Like the market off after the opening bounce or drop, bought up and then kind of closed in the top third of its range. So we very much, not the cleanest on the cues, but we trended up for the most part all day, and it was very clean in my experience today with NVDA. I once again treat these as scalps. You're just playing them move to move. But a better trader, a more experienced trader, would probably have done a better job, and something I'd like to work on, of just holding at least a small piece to see what happens, capture a bigger move. You can use each of these kind of breakout levels as a barometer for where the stock's going. So we never retested 845. We never retested 850. We never retested 855 or 858 rather. We sort of pulled back to this 861 level, touched it a couple times, came back down 861, 862 over here, and continued to the upside. So the levels seemed clean today for me. And for NVDA overall, and we closed at 877 on the day, so definitely was a good name to trade today in my mind, because it gave you numerous chances just to get in on scalps. The volume was right around the average. Just RVOL wasn't particularly high, but it's in a hot sector that's been highly in play all year, so that was my reasoning for jumping over here to NVDA today. So yeah, that's kind of what I was thinking, more or less the trade I was making today. I put this in my playbook. Every day I find trades that I like, and I will break down what I was thinking, and so that's more or less what I'm doing with these videos, talking through them after I've kind of reviewed everything and put it down. So yeah, this was the NVDA trade. Multiple breakouts on the intraday 1 minute. I hope you found something interesting in this video. If you had a different thought on it, let me know. But that's going to be it for right now. So just remember to trade your playbook and playbook your trades.